If you are doing an accountancy qualification, or you are in university and you have a subject as the name of accountancy, or you are preparing to attend a written test or an interview in accountancy field, or you are running your own business and need to understand the real transactions of the business, how to realize that, how to record that in journal, ledger, trial balance, and produce the financial statement, this video is exactly for you. We are here with a new series of videos, case studies and practical questions, which directly will target the questions which are based on real examples of the business in the world. That will directly target your written test, interview, and the test in the universities for the ACCA, for the CPA, for the CA, and all accountancy qualifications as a basic practical questions. So there will be many series and there will be many parts in each series. Continue with each and individual of them and you will learn a lot as a practical accountant, and you can even start working in this field. So let's directly jump to the video. Here we have considered a practical case study and a practical question related to something, an assumption of figures for equity education and the transactions, which is like for assumption for the equity education for the month of January 2023. It will help us a lot to understand the real transactions possible in a business, how to analyze that, and how to record that in journal entry, in general ledger, in trial balance, and how to transfer them to the income statement and to the balance sheet. So going ahead, we will go on each transactions individually and we will record that in journal entries. Let's directly jump to that. For the initial part, we have like you can see here, it started with 1st January 2023, started the business by investing $20,000 cash. How we are going to record that? This is exactly what we are doing now. For the journal entries, let's go to the part journal entry. I have brought a screenshot of those transactions here. It will support us on recording. The first transaction has been incurred on 1st January 2023, which was started a business by investing $20,000 in the business in cash. So what we will do, there is a narration or description. It will help you in future to find out what this transaction was totally related to. So remember this point. So invested by owner, the narration is in your hand and the description can be short, it can be long, based on your decision and based on the policy of the company you are working at. What happened? There was a cash invested for $20,000, and another side, what will be credited is the capital of the business will be credited for $20,000. A point to remember: the rules for debit and credit. There is already a video as the name of secret of debit and credit in our channel. I will put the link here as a card. Go ahead, review that. I recommend pause this video. Start with analyzing, realizing, and understanding deeply how the debit and credit work in different elements of the financial statements. After that, come and continue this video. That will be helpful. You will understand why cash is debit and why capital is credit. So capital is in nature of credit. It means it's a credit. It have a credit balance mostly. We are going to credit that, increases credit, and cash is asset, increases debit, and we have did the same. For the 5th January, there is another transaction which purchased office equipment for $2,500 in cash. So what we will say, purchase office equipment. This is something as a narration. And another side, the equipment, which is an asset, increased with $2,500. And then other side of that, they have paid in cash. So $2,500 will be credited in cash. The other transaction is on 6th January 2023, which bought inventory worth $6,000 on credit from a supplier. So what we need to do here is to record, first of all, remember, you will analyze they have bought inventory for $6,000 on credit. The transaction is on credit. You will analyze. After that, write the narration: bought inventory on credit. So what will happen? When there is on credit and when there is inventory will be debit for $6,000, and on other side we have the cash will not be credit because it is something in nature of liability and payable after a while. So account payable will be credited by $6,000. 10th January, a point to remember, this is the first series and it is very simple in nature. We tried to focus on very important areas and ignore for the meanwhile the very complicated areas of relevant standards for like presentation of financial statement, like inventory valuation and these things. If you like this video, and I mean if you are interested to such type of videos from us in this YouTube channel, then we are going to continue with preparing the most complicated one, with considering the accruals, prepayments, closing, suspense accounts, and many even inventory valuations, different types which exist, with considering all rules and regulations in various IFRS and IAS standards. We will consider that, but step by step and based on your comments. If you are interested, please insert that as a comment, your interest in these type of videos. Then we will continue for generating and increasing this level of videos, and press the like as well. Okay, 10 January, sold products worth $3,000 in cash. They have sold products for $3,000 in cash. So there's a sales in cash, normal. What happened? Cash came to the business for worth of $3,000, but for what reason? It is due to the sales incurred. Sales increase in sales is credit, cash is asset, and increase in asset is debit. The next one, 12th January, we have sold products worth $1,500 in credit. It is in credit, so we have sales in credit, simply in credit or on credit. One aspect, we did not receive any cash for that, so in simple term, that's a receivable. Account receivable will be debited for $1,500, and sales again will be credited for $1,500. Account receivable debit and sales will be credited for $1,500. Other date in 15 January 2023, we had received a bill for advertising expense amounting to $300 due in 10 days. It means we have received the bill, we have received the invoice, but it is not yet paid, but the expense incurred. So what we will do, advertising, don't worry about the spelling, and I'm trying to go as fast and explain it to you, that's all. Advertising expense for the period. You're fully free to type the narration anything you want, but the point is here, only consider the accounts. Advertising expense account will be debited. Remember, it is a nature of expense, and when the expense incur, that will be a debit entry, which is $300. But on another side, when we did not pay the cash, so there will be no cash here, and instead we will have something as the name of account payable, which is payable in a period of time, which is 10 days here. Other one, we have another transaction on 15 January, which highlighted that paid $200 in cash for office supplies. $200 in cash for office supplies. How we are going to record that? there is another expense as well. So office supplies for the business, this is like the narration. The expense account will be office supplies, and the amount is $200. But remember the point that they have paid cash for that, so 200, the cash will be credit. On 17th January, we have collected $1,000 cash from a customer who had a credit balance. They have purchased something from us, but they did not yet paid. The sale was on credit. Now we are receiving the cash. So received cash from customer on receivable. Everything is possible, okay? No problem, whatever you're writing, but try to make sure it is clear for you. So what we have, that was something receivable, and now we have received. What we have received is cash. For what amount? $1,000. $1,000 we have received cash, and the account which was affected, another side was account receivable, which was decreased, asset decreased by $1,000. On 19th January, we have a sale of products and credit for $2,200. So there will be sales in credit, which the account receivable will be debit, because we did not receive cash and we are going to receive that. It will be debited. What was the amount? $2,200. Accounting sees like this. It is not compulsory that you be right all the time, but you need to make sure that you did your best. There will be another senior guy who will review your work, but if you can produce something, if you can record something which is almost perfect, which is very correct, it will enhance your credibility. That's why you try to focus on the meanwhile that you're working, put everything aside and focus on your accountancy work. Account receivable debited, and another side what we have, it was on 19 January, sold products and credit 2,000. Yeah, that's sales. They have sales for 2,200 on credit. In other one, 20 January, we have a transaction which is paid $700 cash for employee salaries. So salaries paid, salaries account will be debited for $700. And if you can see here, we have paid for that as cash. So cash will be credited for $700. On other date, 23rd January, we have two transactions for this date. Settled the bill for advertising expenses by paying $300 cash. We had advertising expense, which was account payable, and now we have paid the advertising expense bill. So what will happen is a liability decrease, which is debit. Account payable is debited for $300. Account payable decreased, and decrease will be debit. Go to debits and credits. It's a useful video and you will learn a lot about that, as well as if you don't know about these elements of financial statement like cash, capital, assets, and these things, there is a video as the name of financial statements and its elements. Go and review that. I will put the link here. Go and review. That will be much more beneficial for you and you will understand a lot. So you have paid a cash for this account payable and $300 will be credited. There is another transaction for 23rd January, which was paid $3,000 to supplier for the inventory purchase on credit. We have purchased inventory but not paid. So paid the account payable of inventory purchased. What will happen again, the account payable will be debited for $3,000 and the cash will be credited for $3,000 for the payment of cash done. On 29th January, we have another transaction. Let's go. Received a utility bill for $500. It means we did not paid. Received utilities bill. That's it. So the account for that will be utilities expense, which will be debited for the amount. It was 500, but we have not paid. Remember this one, we have not paid. That's why our account payable, which is liability, will increase by $500. On 31st January, we have 3 transactions for the same date, paid $1,200 rent for the office space for the period. So rent expense for the period, it is most probably will be the January, but it's possible that it's for 3 months, whatever. Now we believe it's for a single month. We will not complicate the process. It is a single month of January, so the rent will be debited as an expense for $1,200. It seems that we have paid in cash. There is nothing mentioned in credit, so $1,200 will be deducted. It will be deducted from the cash, and it will be considered as credit. On 31st January, there is another transaction which sold product for $4,000 in cash. So sales in cash will be the transactions. We have received, of course, cash for that, so debit the cash, and sales will be credited for $4,000. Another transaction will be 31st January, which is paid $500 for utility expense against the bill received on 29. We have received that. The expense was recorded. Now we are paying the bill. That's why we are recording that. Paid the utility. Yeah, it is utilities bill. So what will happen? Account payable liability will decrease by around about 500, and the cash will also decrease, which is corrected by 500. Now check in a simple point. This is the transaction. Now the debit and credit is equal totally. We have considered the accounts. We have inserted the narrations and the dates. That's the simple journal entry. There are possibility of many referencing and these things based on the company you're working, based on the nature and policy they are following, based on the accountancy terms they are following, principles they are following, and the country you are resident on that. So, but overall, that's a simple rule. Even by this, you are able now to deal with the normal transactions of the business. This was this part. We will continue the next part in next video, but for the meanwhile, review this one and we will continue with the rest. Thank you so much for being with us till end of the video. This is one of the generic, unique type of practical question case studies you can find overall the YouTube. So it will help you a lot in understanding the practical questions of accountancy and dealing with normal deals and transactions within a business, which will support you for your written test, for your interview for a job, for exams in university and accountancy qualifications. Just a kind request, hit the like button. That will be a big support for us. That will be a big passion and promotion for us, as well as share this with your friends. That will be very much helpful for them as well. Thank you so much. Don't forget to subscribe to the channel.